Hey, what's up? I hope everyone's having a good day, and let's get right into this. So this is just going to be what the video is on. The video is going to be on market structure, and I'm just going to break down the way that I understand market structure based on everyone I learned from. So my primary influencers for market structure is Q Banks, MentFX, and ICT. So Q, Anton, and Michael. So those are the three people that, a lot of my structural understanding came from. And yeah, let's go ahead and get right into this. So once again, none of this is financial advice. This is just the way that I view the market and how I trade. And yeah, let's go. So I have a little note here. Sorry, this market is not the market. My chart is very dirty at the moment, but let's hide somewhere over here. And I have a little note here just so I can make sure that we keep on track. But there are going to be two types of markets, right? It can be three if you want to count consolidation, but there are two types of trends. All right, we obviously have an uptrend. This is when the market is characterized by higher highs and higher lows, and then we're going to have a downtrend where the market tends to make lower highs and lower lows. I'm just going to make one more leg of price over there. So it'd be very helpful for me to write all this down. So let's just go ahead and put uptrend over here. Characterized by higher lows and higher highs. This is what an uptrend is. And for those of you that already proficient with market structure, this may seem a bit rudimentary at first, but I'm just going to go ahead and cover the basics, and we can actually move on to live examples, such as with Japanese candlesticks. It just tends to be more beneficial to start off with just lines. And then we have a downtrend, which is characterized by lower lows and lower highs. Okay, so looking at this market, and we realize that it's in an uptrend. Notice how this is a higher high and this is a higher low. But what makes this a higher low is that price is one, higher than the previous low, but two, that price already broke above the higher high. Now, without the higher high being broken, you do not really have a higher low. So if you reference this up here, this becomes the higher low. All right, I'm calling it that because it did liquidate the higher high, and this becomes the high. So for price to come all the way down here and then break, we have a break of structure. But for price to do something like this, then we have not broken structure until price can actually liquidate the true higher low. So I'm going to go ahead and start over just to make sure we're all on the same page. This becomes a low, this becomes a high, this becomes a low, right? It becomes a higher low since price broke above the high, and this high is higher than this low, and thus higher low. And same thing here, liquidate this high, we make a high. And this is when you can take out things like your Fibonacci retracement, and you're going to want to put it from a swing low to a swing high. And I'm going to show my numbers here. And then this is when things like that are really, really beneficial for you if that's how you trade. So you can even put it somewhere over here from this swing low to this swing high, and we realize that price is at a 50% retracement. Now, for this to be called true structure, once again, we really need to see this high get taken out. And this is how I trade, and this is how I was taught. And the interesting part is that when you go back on my videos, you'll really notice that this is how I view structure. Now, if you go over here to the downtrend, we're going to have something called a lower low and something called a lower high. So likewise, for this to be considered a lower high, we need to break the lower low. So once this low has been liquidated, then we can call this the lower high, and this will now become the lower low. So for price to break structure, price would have to come all the way up here and then break structure, you understand? Now this becomes a lower high, this becomes a lower low, this becomes a lower high, lower low, lower high. And then if price were to be here right now, is this a lower high? No, because we did not take out the lower low yet. And yes, right now, if you're just looking at price, if you're looking at price just over here, yes, this low is, you know, lower than the previous low, so then this becomes a lower high, right? But at the same time, until this gets taken out, this is not true structure, right? When you start considering this true structure, you tend to get trapped. You're going to call this a break of structure. You're going to try to start buying when in actuality, price is going to keep going short. So until this true structural level is broken, the market will still overall be bearish. So that's how it breaks the structure work. Let me cross this out on my list. And we can go ahead and get into live examples. Now this video, I don't plan on having it too long. This is just going to be the first part. And then we can make like part 2, part 3, and all of that. But this is just for the rudimentary understanding of how the market flows. And then obviously you'll just have a market in consolidation like this. But typically you would not really want to trade a market like this, right? And that's how that works. I'm going to leave this here. If anyone wants to go ahead and take a screenshot, I'm going to leave it here for the next 10 seconds. Then we're going to move on to live price so we can see how this works with Japanese candlesticks. Okay, and we can really use this on any market. Let me go ahead and use this on EU. I need to clean up this whole chart. I'll do all that. So looking at EURUSD, if you look at my previous YouTube video, I actually covered this short that I took. And the very, very interesting part is that this is all in accordance with the market structure that I just mentioned in this video that you were just taught. So notice how price, let's just follow price from up here. Price broke beneath this low, right? So we can now call this all the way up here an official lower high, given how the low here was already taken out. So then notice how price went down, formed this low, and then that becomes the high, right? So once again, if you want to draw your fib retracement, you'll draw it something like this. Notice how price went up to the 38.2% and then proceeded to go down. Now, notice how price went beneath this low here, right? Notice how candles closed below here. Now, this is when things start to get subjective for you, and you can determine how many candles determine a break. Now, I don't want to give away material from anyone else's mentorship, but with specific people, they see that, you know, 2 candles need to break, need to close below for something to be considered a break of structure. But for me personally, it's just 1 candle, right? I just need 1 candle. I don't need 2 candles. I really don't even count wicks as breaks of structure either. I really just need a solidified candle to close. Now, all this to say that this becomes a lower low, and then price breaking this lower low forms a new lower low here once again. Interestingly enough, where is the lower high in this case, right? This becomes the lower high. Since this is where the market came all the way back to pull back, and then proceeded to break this low. So now this becomes the true market structure, and this becomes the lower high. Now, price broke this. So we just officially had a break of structure. Now, if I reference the pretty little drawings I made, if you took a picture of it, you'll notice how I mentioned that price needs to break the low or the respective high for this to be considered true structure. So we did form a new lower low. So price could go anywhere up to here. But if it breaks through it, then we have a break of structure. So that's what we had. We had a break of structure, but I understood that we still had incentive up here. And if you want to see the straight breakdown, then you can go ahead and watch the video before this, and this will all make sense. However, at the same time, you need to understand the overall trend that the market is in. So EURUSD is in an overall bearish trend from a higher time frame. If you go to the daily, the weekly, the monthly, understanding that and understanding that I had my confirmations, I felt comfortable taking this short. Now, notice how I got out over here when inefficiency was cleared. Typically, if you watch my videos, you'll notice that I get out on SSL and BSL, types of liquidity like that. It runs on buy stops and sell stops. So typically, I would get out over here, but with structural understanding, noticing that price broke above here, I understood that there was a chance that the market may not come all the way down here. Okay, so I'm comfortable taking profit at this level here. And this was not a partial, by the way. All positions were removed, 100%. This was a hard TP. So I felt comfortable targeting this area, and what happened? Price proceeded to go up and break this high again. Now, notice how notice how we just flipped, because now that we broke this high, we just confirmed this as a what? What is this right here? What is this? Okay, you got 5 seconds. Okay, that becomes a higher low. Now, already, if price were just over here, this low is higher than the previous low, yes, but once again, until the higher high gets taken out, this is not solidified as a higher low, because price, if you mistake this for a higher low, it does something like this, price can still come all the way down here and still be valid for that overall break of structure to hold. All right, and let's go ahead and actually let's follow price. Let's follow price. I don't typically do this, but let's follow price. Okay, so after price seemed to have found, are you okay? Okay, we're just gonna hit this special button on my keyboard. Okay, sorry about that, but notice how price went down over here, and then price starts rejecting and moving up. Okay, that's a bit slow. And then notice how price just broke above the higher high. So now this becomes the low, and we're waiting for price to have some sort of a pullback, right? And now as price is pulling back, we understand that this becomes the high. Now, this becomes a high, and right now, this is higher than this, right? So we can say this is a higher low so far, but it is not a confirmed higher low. Yes, it's higher, but we cannot say that 100% this is a higher low until the high gets taken out. If the high gets taken out. Alright, so the high just got taken out, and now we understand this is a higher low, and then you proceed to follow price, and that's really how simple it is. Now, when I take this trade down here, actually no, that trade wasn't on YouTube. Okay, yeah, so there, you guys wouldn't see that, but notice how I have this level up here. Let me go ahead and show you guys what I saw to determine if this zone was going to hold and if I'd be able to get involved. And once again, this is market structure, and this is why market structure is stressed so heavily, because it is really one of the most important components of trading. If you cannot tell which direction a market is going in, then chances are you will be confused a lot of times. Now, if the market is moving in an uptrend, obviously you'd want to buy. Now, there are times where you'll see me short in an uptrend. That's not out of the question. And there are times where you'll see me long in a downtrend. But at the same time, the majority of your positions should be in accordance with the trend, if not all of your positions. These instances that I'm talking about are not too common, but it is possible, just because you guys may see me do it or may not see me do it. So I can't say that I have never shorted in an uptrend before. So notice how when we start following price over here, we're going to delete you, delete you, delete you. High, higher low, high, higher low, high, higher low, since we just broke above here. So now this becomes what we call a breaker structure once again. So it'd be easier to do this. This becomes a breaker structure, and now our swing point is from this low here, to this high, and meaning that if price were to break beneath this low, then we just had to break a structure, right? And notice how price did break beneath this low, and then from that I understand that chances are this zone's gonna hold, right? We're having a shift in structure. We just broke structure, and we had a second break over here, which for me personally, with the way I trade, it's really nice to get 2 breaks instead of just always taking it on the first break. And then we start to follow price down. And let me show you guys something cool. So notice how price just broke beneath this low here, but I have already established that we broke beneath this low here, so the swing point is from up here to down here. So once again, if you want to draw your fib retracement, and this is just a nice way to see structure, you won't always see me draw mine, but this is just a nice way to see structure. We realized that price rejected off of the 70.5 level, but at the same time, was price not breaking structure in here? right? And this is why it's really, really important to understand what a lower high is, because if you classify this as a lower high just because you saw this form some sort of resistance over here, and you say, okay, this is a lower high, price went down, went up, it broke it, okay, I'm bullish. Now I'm done selling the market. I'm bullish. I'm gonna long the market all the way up here. If you did that, chances are, you know, you would have been in profit. But overall, and actually someone just talked to me about this, why would you catch the 30 to 50 pips when you can catch the 300 pips? Now, once again, there are instances where I will go for that 30 to 50 pips, but in 9 times out of 10, I prefer the 300 every single time, because that's where the market is predominantly going. So we had this here. If you mistook this for a break of structure, then maybe you went ahead and just got involved, right? You say that there's some demand over here, you're going to go ahead and get involved here. You would have been in profit. Had you not been a break even, your stop loss would have gotten hit. And there's nothing wrong with that, but as long as you're flowing with structure and you're not mislabeling these parts, then you tend to have more of an edge in the market. So I understand that this whole time that price can be moving like this, seemingly breaking these highs. Not seemingly, it is breaking the highs, but overall I understand until price breaks this level up here, we're still bearish, right? The market is still moving down. Now we went ahead and broke this here, so this becomes the swing high from over here, because this becomes the true lower high. And we're gonna go ahead and play price some more, and then boom, just notice how price is shifting down. And then I went ahead and took a 1 to 4 trade down here. I think this was the week before, but that is how market structure works, right? It's very, 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 very important to make sure that we're labeling everything correctly, and then that's gonna actually go ahead and help out our edge. So I'm going to show you guys the nice. Okay, I guess I may have to draw this again, but I'm just gonna do a quick recap to make sure everyone's on the same page. I'm gonna go ahead and actually end the video here. But this becomes a downtrend, a lower low, lower high, lower low, lower high, lower low, lower high, lower low, and seemingly a lower high, but it is not confirmed until we can break beneath this low here. And that's all market structure is, right? And this is fractal, so on any time frame this is very, very valid. You have seen me do it on very, very low time frames. You've seen me do it on a weekly time frame. This is all valid. But as long as you have this universal understanding of market structure, then you'll be fine. Now, yeah, and that's where we're at today with EURUSD. And as you notice, today I took a 1 to 5 long in here, understanding that, you know, price is breaking, right? We start to have the structural level form, price pulls back, I get my confirmations, then I go long. I really do need to clear all this, but this is the beauty of it all. I hope this made sense. If you do have any questions, feel free to reach out. But you can also watch my trade breakdown videos, and you'll see like live explanations of why, you know, I'm seeing structure the way I am, and why and how I use it in my trading. But yeah, I hope this makes sense. Be on the lookout for Market Structure 2.0. If you just shoot me a text or just comment saying that you want that second market structure video, I can go even more in depth and give very, very live examples. But actually, let me give you guys a pop quiz before I leave officially. So right over here, we notice that this is the lower high and this is the lower low, and this is the lower high. Notice how we did break below here. So now our swing point is from up here to down here. So anything can happen within here as long as price does not break up here, since if it does, then we'll have a break of structure moving up. So now you can start to do things like confirm your trade. If you wanted to go short, you can just say, okay, we have this this level of supply up here. If price hits it, then I'm going to be looking to get short. I'm going to be looking to take this low out, so on and so forth. So now we understand that. And when did price shift from bullish to bearish? Over here. So notice how we're moving like this, right? Creating these highs, creating these lows. Where is the break of structure here? Let me go ahead and ask you guys this, and then we're going to end the video here. Is this 1? Is this 2? Is this 3? or is this 4? Now, which one of these did price break for me to say that, okay, now price is moving downwards? Which one did it break? Got 10 seconds. So if you said 1, price did not actually form enough of a retracement to consider this a structural level. This is just one candle. You know, this is not multiple candles that form that. So officially, 1 is off the table. If you said 3, this was a higher low, but it's not the most recent higher low, so 3 would not actually work, and 4 is just in a really random spot. This is not even relevant to where we are now, so 2 becomes the answer, because now notice how 2 is a higher low and price broke above the high, solidifying this as a higher low. So now the swing point is from down here all the way to up here. So once again, anything can happen in between here. It does not matter. But right when price broke beneath 2, we understood, okay, we're moving towards that bearish momentum. Now, we understand this becomes the high, this becomes the low, or likewise, you can just say that this becomes the high all the way up here. This can be internal low. It broke the internal low, and now this becomes the structural level from up here to down there. And this is the pullback, broke beneath the low, and that's how that's going to work. And I'm not sure how this is going to end. I'm out for the day. It's Friday at 1:16. If you want to try this yourself, this is the current date. If you want to look at how this would end up playing out, but just in terms of structure, then this is just something that you'd want to be looking at. So like I said, this is just going to be the first part of more if you guys want to see more, and then we can go into internal structure and external structure and all of that fun stuff. But just overall have that understanding. Even over here, right, broke beneath the low, formed a lower low, this becomes a lower high, and right now this has not solidified itself as a lower high yet until it breaks this. But chances are, with how structure is flowing, it will end up breaking this. But until then, if price just comes all the way up here, this should just be an internal break of structure until we break this true level over there. So I hope everything I said made sense, and thank you all for your time, and peace out.